Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 187. Now, today I want to do something a little bit different. We're not going to cover economic news as much. I want to go cover a handful of different charts for you and just discuss a little bit more about resistance. So I'd like to get into resistance. What does resistance really mean? Because we've had a lot of bounces in the past. After major sell-offs, you get a nice big pop and bounce. But I also want to talk about resistance, how I look at resistance, what you should be thinking about as stocks get into resistance, and just overall the concept of a stock stalling out. So that's what we're going to cover. We're going to cover more on the chart. So if you're joining us on a podcast, you might want to join on video to take a look at the charts together on the YouTube channel, and let's get started. So why do we take a look at resistance, and why is it important to look at charts for resistance? Well, the first thing is resistance is a place where there is trouble, where there is problems that could occur. Basically, there's always turmoil that happens in the marketplace. There's the bulls and the bears that are fighting. It's kind of like a chess game that's constantly going back and forth, and sometimes a piece gets taken off white, and other times a piece gets taken off black. So there's this back and forth that happens. Now, naturally, overall, just naturally speaking, what is the tendency of a human being after they're born? Well, naturally, they grow up and, they age, and then eventually they die. That's just the natural cycle and the natural tendencies. If we look at stocks, the natural tendency of a stock, what does it naturally do? They inflate higher, and this is where inflation comes from, right? So they're inflating higher because just the rise of prices overall. If you've never seen inflation, you might have heard of it in movies where hamburgers used to be 60 cents and now maybe they're $1.20 or $2.99 and that kind of thing. So prices keep inflating, where gas used to be, 59 cents a gallon to $1.20 a gallon to now $3 a gallon. So again, it continues to inflate with time because the value of money continues to kind of rise up in a way that you have to pay more for things and goods. This is what inflation does, and it's just the natural tendency of money because it just becomes worth kind of less and less over time. It's a fiat currency. You can't really do much with it besides kind of burn it and make kind of a fire. So when it comes to the stock market, the natural tendency of stock prices is to go up. This is why the typical buy and hold approach works so well when you're doing dividends, which I highly recommend for many people, especially as you get into your older years, 40s, 50s, and you want a peace of mind, buy some dividend stocks, let them sit kind of, and in a way forget them and just accumulate things. But overall, it's nice to see where things could be problem areas, and that's where you take some profits. And this is why it's good to look at resistance. And resistance really comes down to where things are struggling, where things are stalling. Just like, for example, you get to your college years and maybe you start struggling a little more with your tests. Maybe you get into, your elder retirement years and you struggle a little more financially, or just physically you struggle. And with stocks, it's no different. As a car gets into a certain area with its speed, it struggles to go beyond that level. And here with stocks, we get the same kind of concept because they've pushed that gas pedal so far, so fast that eventually it runs out of gas, just like any machine would. So this is what eventually happens because you need people to constantly be buying things for stock prices to keep going higher. So if we take a look at Apple right here, notice that we've had kind of this sell-off right there from, let's say, mid-April here to come back into about 160. We've had a major rise up from 160 to 170, 170, 180, 180 to 190. And then the stock stalls out. We had resistance at 190. Now we got the next little flood of gas, another little push to that next stage, to that 193, 194, 195 level. But again, it's stalling out a little bit. So look at what happens is that when you push the gas really, really hard, eventually things will stall out. So the further you push that gas pedal, the more you should be taking off profits in the strength. Now, this is a daily chart that I'm looking at from May to just basically from May to kind of June. And here within just about, let's say, about 11 to 12 days, we went up 17% in Apple stock. That's amazing and remarkable. So if you can do that, then you should definitely be taking some off into strength as you get into some digestion, even if it's half, and then eventually add that half back in sometime in the future. So that's kind of the way you think about it, that as we get into resistance levels, it's a good time to take some off because eventually stocks will come back. So take a look at, let's just say, our sideways pattern from January to May. We got into this level of resistance. We got into these higher prices around March in Apple. And when you get into this higher price level, you start creating a little bit of turmoil, and this is where you take some profits. Now eventually you got that pullback to that 165 level, and this is where you could add some. Again, we get back into it, resistance, take some off, come back into support, and you can add some for that stock to continue moving higher. Now you don't know that it's always going to go ahead and reject that resistance. Sometimes it breaks through like we did here in May, and it continued to move higher, and that's perfectly okay. Then you wait for the next pullback. Now you can do this on a daily time frame. You could do it more on a weekly time frame. It really just comes down on your perspective, your time horizon, how long you're looking to invest in. But overall, resistance is a place to take some profits because this is where stocks start rejecting and pulling back. And it's a good time to cover this because there's a lot of stocks right now that are hitting resistance, especially today. So you could see it right here at the 1700 level right here. On Amazon, we're hitting some resistance. Now, this could be just minor resistance, but it's resistance. If we take a look here at American Express, here's kind of our weekly. Again, we're getting into that 101, 102. We're right at resistance. Many of these stocks, when you take a look at them, they're at some critical points where you could get a pretty significant pullback. Now, you might only get a simple pullback. You might get a small pullback, but you have to wait to see if this accelerates and see if it accelerates to know if it's going to be a small pullback or a major pullback. Now, the more times it kind of hits resistance, then you have more chance or probabilities that it will break to the upside or really reject it in a nasty way. Oftentimes when it hangs and lingers at those highs or at the tops for a while, then chances are it'll break through. But right now, as you're noticing a few of these stocks, they're right there at the peak, right at resistance. And you can see with a handful of these stocks, they're all right at a little bit of a consolidation area, and they're coming into resistance. So how do you spot this resistance? How do you know it's going to happen? Well, I've talked about this in the past in some of our episodes. You know, we've done a little bit more news related posts in the past here, the last couple months, but more so lessons around episodes between 50 to 100 to 150. There's been a little more educational things like kind of like this episode. So how do you spot this? Well, there's a couple of ways to kind of know this. Well, one of the first and easiest ways is to look at some sideways action and look at some highs, swing highs where they got rejected in the past. So as we approach those, you're kind of aware and prepare for that as well. So that's one of the ways. Another way is to look at whole numbers. Look at 190, 170, 150, 100, those kinds of things. And a third way is being stretched from an oversold situation. So here we are oversold. We had a counter trend bounce. So we had a major bounce, and now you're starting to reject things. So basically, those are three simple ways. Of course, there's many other ways, but this is kind of a way to see where is resistance, where is it coming into. So the first one is looking at the past swing points where it rejected, okay, looking at some whole numbers as well, and looking at how far angled or elevated that move is from there. And of course, you know, for me, for some of the advanced people that have been with me for a while, you're looking at reduction of volume. As volume starts to dry up, that also starts to put pressure on stocks because you're basically reducing gas on the gas pedal. And you can see right here why we're getting a 2% pullback here in Facebook. Like a pretty big day could take out, let's say, about 2-3 days worth of gains. But then really when you look at it, if you get another day that's big down day, you could take out about a month's worth of gains in 1 or 2 days. So imagine that. That's definitely where things get a little more scary. You can see here Google also as well, 1150, a nice whole number. Okay, you can also draw this across. Here's our swing point that we've talked about that. And from the swing or the bounce from the previous swing point. So here's a bounce, here's our A to B, B to C, C to D pattern. Again, you look at the steepness or that angle, how fast it moved. And now that we have rejection, you can see there what's happening and what's going on. So that's really what you're looking at as far as identifying some resistance levels. Let's take a look at here's another one. You can see here Johnson & Johnson. We got into, here's a swing point. Okay, we got into it, we even broke above it. So you could see sometimes you break above it. As I always like to say, does your friend always show up at 6 o'clock for dinner? Not necessarily. Sometimes it's 5:55, sometimes it's 6:03. It's not always 6 o'clock on the dot. So here's the thing, is some stocks will break a little higher, they fake you out, and then they get that massive movement lower. So here's our swing point. When you look at where this rejected, it was almost 150. It was really 148. Our other resistance was right around 145. So whole numbers didn't apply here as much, but when you look at the steepness of the angle, you could see here was our initial upward trend in 2017. But overall now, if you look at, let's just say, kind of a long-term trend, well, that's a little more healthy, right? You're looking at maybe a 30, 25 degree angle. That's a little more healthy, and that's more logical and realistic. Okay, doesn't matter which stock you do it on. Here is Lowe's. So here's one good example of one that's overextended and had a pullback. So here was our swing point. We had a rejection as well right there about mid 2017. And then we finally had a breakout. Now that breakout was so fast. This was the issue. In this case, where's resistance? Well, the issue was that it was so far stretched. You got into resistance about 110, 109, 110. It was about, let's see, the highs here were 107, 108.98. 108.98 was the key, and then it rejected it from there, and that's why you had a massive pullback. Now, again, we're snapping back a bit, coming into 100, but this could be another form of resistance back to where, right here, some previous action was taking place. So be mindful and be careful, because again, you're starting to get very stretched and a stock is stalling out. And if you were able to get into the stock in April and May, and now you're taking some profits around the 100, that's from, let's just say from about 85 to about 98, you're making about 19% on your money within a month and a half. So that actually works out quite amazing. Let's take a look here at MasterCard. We talked about this one as well. Here was the breakout. This is why you always take profits into strength, but I talked about this declining volume just slightly. You want to also watch here how it's pulling back. Right now we're pulling back about 2%. Your key support level is just right there, 194, 195 is kind of your key support level. If it comes back there and bounces, it could be a nice value play. But right here, there was not really a true clear level of resistance on this stock, simply because, well, you've already kind of been moving to the upside. It's been in a stair-step pattern. You did have some gap weakness, but I would say if anything, you looked for some stretched areas where you got 1, 2, 3, 4, 5 days, where you see 5, 6 days of just upward action. That's when you're probably due for a pullback. And the more days that you see in one direction, the more likely it'll snap back in the other direction. Here's Netflix. They talked about this one, making all-time highs, all these kinds of things. And we did get into 368, 370 here in Netflix, but now this one day is taking out about 3 days worth of gains. So it allows you to slowly start nibbling and building up a position when you get these kind of nasty 10-point pullbacks, 3%, 2-3% pullbacks in stocks and companies. And you'll see some of these that are hit the hardest are the ones where they're hitting at key resistance levels from the past. So here we are with PayPal, about 3%, because we're moving here in this sideways action. If you take a look here, Shopify, also a huge stretch. So that's why in one day you'll get a 3 to 4% pullback, because you were already up 20% in just, a handful of days, in about 14 days. So 3-4% is pretty typical and normal. So this is what you're watching for as you're looking for when stocks will stall out. Is the first thing is, where are we coming into some past resistance levels? The second thing is, are we coming into some whole numbers, whether it's 60, 70, 80, 90, 100, 150, 180, 200? And then how far stretched are you? So if you kind of keep it like this, keep it simple, don't make it too complicated, then it'll allow you to kind of find where or when a stock will start probably pulling back, or where it should start acting weak. And if it doesn't, more power to you and great. But if it does, well, that's why you should have taken a little bit off the table or profits, or you use these pullbacks as a buying opportunity. So you could just be an accumulator, just constantly collect stocks up until when you retire, and then you slowly sell with time as you get into retirement. But as you start seeing these pullbacks, if you're, let's say, a collector of Square, well, as it pulls back, then you buy a little more. So you always have cash on reserve, and you're just constantly accumulating. So anyways, this is what I wanted to share with you on some resistance levels here. Overall, the market, as you can see, we are getting a little bit of a pullback here, about 8-10 points on the S&P. I wouldn't be surprised if we get an even more nastier pullback where Bollinger Bands are compressing, volatility is compressing. This can be a problem to where we've had in the past, where we're getting into the weekend, we're getting into Friday, we're kind of stretched on the short term. Volume also was a little bit weak here when we were going up compared to, some of these down days in the past. So it wasn't anything huge volume right there for buying action. I think it was just little nibbles here and there. So if this starts to pick up, which you don't know till, another day or so, you won't know that. You just have to kind of watch the action. But if it starts to pick up, well, that's when you can either accumulate, buy more shares, or just wait patiently until it comes into better value. But right now you are a little bit stretched. If you're getting into these resistance levels, when you get stretched, that's where you take your profits. You take half off, a third off, a quarter off, depending on your trading plan, depending on your strategy, your risk levels. Everybody's is different. You stick to that and you'll live to survive another day. So anyways, I hope this was helpful to see resistance levels in areas, and you pick any stock that you're looking at, doesn't matter which stock it is. Look at these three main concepts. Okay, so you're looking for previous swing points. Okay, that's number one. Number two is round numbers. And number three is you look at how fast a stock accelerates. The faster it goes up, the more likely it's going to come back down. And then combine that with a decrease in volume, point number four, that also helps confirm the move. So when you have a rising bearish volume or a decrease in bullish volume, that also confirms that you'll probably get further lower prices. Again, doesn't matter which stock. Here we have an accelerated bearish volume amount, and there we go. We get sell-off. Here it is. Here's our swing points. Here's our round number. And yeah, and the huge acceleration to the upside from April in LVS. So when you look at those couple of things, combine them together, you'll know when you get into resistance, or at least when you should be coming into a pullback. So I hope this video was helpful. I really thank you so much for joining me in this week's video. We're doing a little bit more of a lesson today, and let me know what you think. Would you rather see a little more lessons or more economic recaps? And that way I know what type of videos to create for you. Now, if you want to join me on future videos, be sure to subscribe on YouTube or join my newsletter list here, where we have the Iron Condor course coming up here in July, along with some other great training and material. Thanks again for joining me. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.